Hello everyone, I hope you're having a good day. Clifford Bennett, Chief Economist, ACY Securities. We're seeing a manufacturing slowdown across Asia today. South Korea's manufacturing index down for I think it's 24 months now or more, and in deep contraction territory. Taiwan slowing markedly. Philippines slowing markedly. We are seeing a regional manufacturing slowdown in response to the slower activity of Europe, China, and the United States simultaneously. This is why I'm so concerned about the Australian dollar outlook. And I do think the Australian dollar can head to 65 cents. And some of you will remember that I made that forecast in December last year, my 2022 forecast, before the Ukraine conflict was even on the horizon. And I said the Australian dollar would hit 65 cents this year with risk to 58 cents in 2023. The demand for Australia's exports is going to slow. They're not going to evaporate, but exports are going to slow. Agriculture will remain in high demand, but minerals, resources are going to be a little bit susceptible to this global and regional manufacturing slowdown. Of course, a lot of this is coming out of a variety of reasons, from still lingering COVID supply chain disruptions, particularly out of China, to the conflict in Europe, and of course, an ever worrying situation in the United States with the likelihood of Europe going into a deep, dark recession. So people are starting to pull back, consumers are starting to pull back, and businesses are starting to pull back on really not being so keen to spend money on expanding market share. In Australia today, we saw the manufacturing PMI also start to roll over to the downside, and that was very concerning. And it just goes to show that these global repercussions are seeping through into the Australian economy. I remember when the Reserve Bank said, the rest of the world has high inflation, but Australia isn't going to get that. It's not going to come here. I mean, completely wrong, okay? And the same is true of the economic slowdown that's really gripping the world now. In fact, it's tipping over the edge in towards a more of a crisis economic outlook, something I've been warning of for some time, and all the writing is on the wall. And as the economic data comes through, it just increasingly paints that picture. We should all be thinking about playing defense. And it's fortunate that we have in this modern day the financial instruments to make the most. And in fact, you can profit on the downside in this market. And I think you have to at least take the first step of defending your investment portfolio. We're seeing property prices fall in Australia. We've started to see the first indications of a price top in the United States, as I've been warning of for some time. You have to understand that if property prices in the United States begin to decline, it's going to compound the fear in consumers and businesses alike there so much that we're going to see a definite extension of the already existing recession in the US economy. Also, US job opening numbers have been rolling over, suggesting that, employers are looking to hire less people moving forward than they previously were. And it's still at very elevated levels, but that is a concern as well. And also in Australia today, we saw construction spending drop for the second quarter 2.5%. Now, those kinds of drops in construction activity in Australia really only occurred during the lockdowns of the GFC. There's no lockdowns now, and we're again starting to see similar sorts of numbers. There is a lot going on that is wrong with the Australian economy. And those who are out there somehow thinking it's their job to just say the Australian economy is strong for the sake of it are completely wrong. This is an economy that is already tilting over, and with regional manufacturing slowing in the way it is, the outlook is not very positive over the next 12 months to 2 years, maybe 3 years, but certainly over the next 12, 18 months. So this will bring fresh downward pressure on the Australian dollar as investors all around the world look to deleverage further out of risk in financial market assets generally. One of the first things they'll see that they really should lighten up on is any Australian dollar exposures that they have. So I think there's a real risk the Australian dollar develops a kind of free fall process in the not too distant future. We're seeing significant downward pressure already. On the equity side, the Australian stock market has already fallen sharply, as I said it would. I think we're only in the early stages of this decline, and there is much further to go. Do be careful out there. Thank you very much for watching. Clifford Bennett, Chief Economist, ACY Securities.